at CHN Housing Capital. And I'm really happy to speak with you guys today to share information about our mortgage product called the Believe Mortgage. First of all, a little bit about CHN Housing Capital. You guys might know, I have heard of CHN Housing, CHN Housing Partners, but CHN Housing Capital is the lending arm of CHN Housing Partners, who's been in the community helping with home ownership and rental and utility assistance and all kinds of good things that have to do with housing for over 40 years. And we introduced our mortgage product last year. And we had great success last year with the product. And we had good success this year. And we're looking to do even better and greater things this coming year. So the CHN Housing Capital product called the Believe Mortgage is a mortgage product that has flexible guidelines to help people to qualify for mortgage. So the minimum down payment requirement on the Believe Mortgage is 5% down. I'm sorry, 3% down payment. And there's no mortgage insurance, no PMI. I'm going to use a lot of terms that you may not understand, but hopefully as you proceed and move forward and decide that homeownership is for you, in a homeownership class that
Hey, Denise, can you hear me? Unfortunately, your phone's breaking up a little bit. It's coming in kind of staticky. Uh-oh. Do me a favor, guys. Can you put it in chat? Can you guys hear Denise okay, or is it still coming in staticky?
It was staticky. Nothing at all, of course, now, but I couldn't hear pretty much anything she said.
Okay. We can get her back. Give us one moment, guys. Thank you guys for being patient. Here she comes. Okay, she's back in. Okay. Try now, Denise.
Did they get any of that?
No, try it again. Yeah, sorry about that.
I'm so sorry.
That's fine.
Okay, so none of it. Okay, yeah. Again, my name is Denise Robinson. I'm the Community Development Officer for CHN Housing Capital. And we are the lending arm for CHN Housing Partners. And we have a wonderful product. It's called Believe Mortgage, not Believer's Mortgage, but it's called the Believe Mortgage. And it's been in existence for about a year and a half. Am I okay, Brandon? Can you hear me?
Yeah, I can hear you perfectly. It's perfect. Thank you, Denise.
Okay. All right. So the Believe Mortgage is a mortgage product that has flexible guidelines to help people to purchase a home. First of all, you don't have to be a first-time home buyer. You don't have to be in a certain income range. You just have to want to get into a mortgage and need some of the flexible guidelines that we have. The minimum down payment on this mortgage is 3% down payment. This is a conventional loan, which is different than an FHA loan. I know you've probably heard about conventional and FHA, but this is a conventional loan, and you only need 3% down, and there's no private mortgage insurance, no PMI. So I know I'm going to be using some terms that you may not understand. And if you like, you can stop me, ask me what I mean. But private mortgage insurance is like gap financing. Typically on a conventional loan, if you don't have 20% down, the lender is going to want you to have PMI, which protects the lender.
Oh, no.
Say this product does not have that requirement. Not having PMI helps you qualify for more mortgage. In other words, we look at your debt to income ratios, and the more the payment is, the more it hits your debt to income ratio. So if you don't have PMI, that's going to help. So there's no PMI, there's 3% down. The down payment can come from you, it can come from a gift. And we also have down payment assistance programs to help you qualify, to help you with the down payment. So typically, what many first-time buyers or many young people have a problem qualifying for a mortgage is because they don't have down payment, or the credit scores may not be what they think you should have to purchase a home. The Believe Mortgage helps you in those areas. It helps you with credit score. So the minimum credit score for this program is 570. Just because you have a 570 credit score, though, doesn't mean you're going to automatically qualify for this product. You're going to need to make sure that you make all of your payments on time. Because what they're going to be looking at is how you pay your bills. You know, there are a number of things that can affect your credit score, and whether you have a lot of inquiries, or your ratio for debt to how much you have outstanding and your credit limit, that can hurt you a lot. We're not interested in that in this program. We're interested in whether or not you paid your mortgage on time. You can't have any more than $1,000 outstanding on any collections. So if you guys have collections, you need to do what you need to do to clear them up, because those can hurt you and stop you from getting a mortgage, no matter what your credit score is. So we don't have, again, we don't have the requirement for PMI. You don't have to be a first-time buyer. You do have to complete a homeownership class prior to closing on your loan. We offer classes. Right now we're done for the year, but we'll start up again in January with classes. But if anybody is interested in moving ahead right now, and you're saying, okay, I need to get into a class, there are classes that you can take online. There's a free class that you can take online that will suffice for this program. You have to have at least 8 hours of home buyer education in order to close on a loan. Have you had any questions so far? Because I'm going kind of fast here. Any questions?
Is there any program to help you to get your credit together?
I can't hear her.
She asked if there are any programs to help get the credit get together. If you got any help, like I was telling everybody in the chat, if you got any help with your credit, talk. I think I've literally text everyone in on this Zoom. Text me back and I can help you with that. Like Denise was saying, with those things as far as collections and as far as payment history, I can help with those by sending a good letter to your creditors, and we can try to dispute those collection accounts also to help with that aspect. So get with me after the Zoom. I can help with that aspect.
Okay. Any other questions about credit or anything like that?
So you know what, Denise, I know a lot of people were asking me initially was what's the process, because I know the process, but can you go over the process? Because a lot of people are telling me asking me how long the process takes and what all is needed. If you can go over the process so they can have an understanding of a timeline, because a lot of people are saying, well, I need to get this done in so much time, and I'm trying to explain to them there's not a set timeline per se, but what is all needed, what's all needed in order for them to qualify for this program.
Sure. So the way the mortgage process works, you get pre-qualified for a loan for whatever amount you're trying to get pre-qualified for. Then you work with Brandon, you find a house, and then you present a purchase agreement to me. At that point, the clock starts ticking. Typically, we try to close a transaction within 45 days. So during that time period, you're going to go through the loan process. The way the loan process works is you present your purchase agreement to me. I make your application live. We start the process with doing a pre-qualification. So you provide your document, you provide your information. We pretty much, based on the information that you give us, we determine, okay, we say, okay, you can qualify for this amount of money. Then you work with Brandon, you find a house, then you present your purchase agreement. Once your purchase agreement is presented, then I'm going to forward the file over to the processor. The processor at that point is going to work with you to make sure that you have documentation to support all of the information that you provided in your application. So the processing time is kind of depends on you and how prepared you are with providing documentation. I always tell people the first thing, if you're serious about purchasing a house, you want to do it in the next 30 days, or you want to get started with the process, the first thing you need to do is to put your documentation together. You're going to need your last 30 days of pay stubs, your last 2 months of bank statements, and your last 2 years W-2s and tax returns, because what we're looking for is a 2-year history on your 2-year history for your loan. Any questions so far? So
I have
during,
a quick question for you, Miss Denise.
go ahead.
So you can hear me clearly, right?
I can, yes.
All right. So you said the last 30 days pay stubs, last 2 years.
W-2s and tax returns.
Tax
Federal.
returns,
All we
W-2s.
need is federal. We don't need the state or the local, just the federal, but all pages of the federal.
Okay. And then I
And
do have
last-
another question for you.
And the last 2 months of bank statements, all pages. Go ahead.
Some bank statements as well.
Mhm.
And then my other question would be, I know you all don't service certain areas. Can you just go over what areas you all are particularly like focusing on?
So Cuyahoga County and Lorain County. At this point, we're going to expand it. In 2023, we're going to expand it. We're probably going to be Akron. We're probably going to be in Summit. But right now it's Cuyahoga and Lorain counties.
What are you looking for on the bank statements? Like, what will get you disqualified on the bank statement?
That's a good question. That's the best, probably going to be the best question tonight. I was going to get into that. So I know people don't like, people say, I don't like banks. I don't want to put my money in the bank. I don't want anybody tracking my money and seeing how much money I have in the bank. Unfortunately, for the loan process, you gotta put your money in the bank. That's a must. That really is a must. We're looking to see they're gonna go through your deposit. They're gonna look at what you're buying. They're gonna look at what you're depositing. They're gonna look at where the money comes from. So if you get your check automatically deposited, that's fine. They can see that. But if you deposit cash, cash is a no-no, a big no-no in the mortgage lending process. And see, this is where the time comes in, because if the processor sees that you have cash and that's deposited, we gotta figure out how to get around that, because what's going to happen is they're going to back it out. If we can't say that we know where the cash came from, then it gets backed out. So if you guys have cash, if you're thinking about purchasing a home, I strongly suggest that you get your money in the bank now. So when you provide your bank statement, the money will have been seasoned. It only takes the next bank statement to season. Does that answer your question? But the big thing that they're looking at, to be honest with you, verification of the funds becomes the most important part of the loan process. Once we've determined you credit qualify, you've been on your job for 2 years. Once we've done all of that, the rest of the time is going to be spent on verifying funds. There are government regulations that say we can't use cash because cash can't be verified. They want to make sure that there's no money laundering, no terrorist money. I mean, there's a number of things that probably you don't even, you're like, why they thinking that about me? But those are the rules, and like I tell people, this is one of the major rules that the lender has that wants to lend you money. And if you want to borrow their money, you got to follow their rules. You know what I'm saying?
Okay.
What was the rest of your question?
You said it only takes one bank statement to season the money?
So, okay. So say you go and you put the money in the bank today. Tomorrow you say, oh goodness, let me put this money in the bank. Your statement gets cut on on November 25th. You're not going to give me that statement. You're going to wait till the next statement, because the next you're going to give me that statement and the one following that. Does that make sense?
Yeah.
That's what you have to do. And then have your statement cut in a few days, and then bring me that statement, because the money, it's going to show up in the next statement. It's going to have your balance carried forward. You understand what I'm saying? So whatever your balance carried forward, that's your balance. And then she'll look at to make sure that there's no other large deposits within that month. But if you get a gift, the gift has to be verified. So if you're getting a gift from someone, that person has to be prepared to provide documentation that they had the funds to give. So what you're going to have is, so if your mom is going to say, okay, I'm going to give you money for your down, I'm going to give you $2,000 for your down payment. Your mom has to provide her bank statement to show that she had $2,000 to give you. Then she's going to have to sign a gift letter that says that basically she is giving you the money as a gift, and it doesn't have to be repaid.
What about tips, like bartender tips or waiting tables or something?
So, if that's what, okay, that can be explained if that's what it is, but
Okay.
it's got to be consistent. You can't put in $200 one day and then $6,000 another day. You understand what I'm saying? It
Mhm.
has to make sense. It has to make sense. If you get $300 every day and then you put it in once a week, then she needs to see a history of that. She may
Okay.
ask for more statements. You understand what I'm
Okay.
saying? So she can
Mhm.
see a history. If that's what it is, you need to have a good records. Then you put on your you have good records where you keep, okay, on July, on November, whatever today is, 16th, November 17th, I got $300 in tips. And on November 18th, you got a record. You understand what I'm saying? Make sure, if that's the situation, that you have a record so that you can show that you are counting for your money.
Okay.
Okay.
I have a question. You said no, you had to be on your job 2 years. I just transferred over to another job and I haven't even been on there a whole year yet.
So where were you previously?
I was in a nursing home. I was there for 3 years.
And did you leave one job and go to another job, or did you have a break in between?
It was just like a week break until I got.
You're fine. You're
Okay.
fine. They just want to see consistently working for 2 years.
Okay.
They want to see that. Now, because of the pandemic, some people can't, don't have that. So there are some exceptions that will be made or that can be made, but they're going to want to see that you paid your bills on time. You can't say, well, I was, it was the pandemic and, da, 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 da. That's why I didn't pay my bills. So now you don't have the history, the 2-year history, and you didn't pay your bills on time. That's not going to work. But I've had people that, got laid off during the pandemic, but with the checks that they got, they were able to keep their bills up. And that really showed initiative and showed positive for them.
Hey, I got a question.
Go ahead.
If you off all 3 shifts and you get Social Security, would that be a problem?
If no, Social Security, that's income.
Oh, okay.
Yeah.
What
Yeah.
What happened if you file a bankruptcy? Like a
You
Chapter
have to
7?
be out of bankruptcy for 2 years.
Okay.
How long
So
would you have needed to maintain a credit score of 570 or better? Like, what if it just got to
I'm
that range or
just
better?
looking at when I pull the score. That's all I'm looking at.
Oh,
When we pull the score, we're going to see whatever the score is at that point. That's what we're going to use. So if you got a 572 and you have a 575 and you have a 565, we're going to use the 572. That's the middle score. So out of the 3 scores, we're going to use the middle one, not an average. Everybody always says, was it an average? No, it's the middle score. So your middle score needs to be 570 or above. Everybody understand that? Do you have any other questions about credit score?
no, that's it. That was it for me.
Okay. Okay.
One more
Keep
question,
coming with
sorry.
the questions because
I have one more question.
Go ahead.
What about if you have like an overdraft or a negative balance on your bank account at 1 or 2, at a given time or whatever? Like you recover it. It's not negative when you pull the balances or the statements, but what if it has been before?
So they're going to ask you what happened. It doesn't look good, but if you got an explanation, then you're, fine. They just need to understand what happened. So, but every month you can't give them 2 months of bank statements and you got a negative balance. Because number one, well, then where's the money? If you got to have money to close. So, you know, you have to have your some money, your 3%, whether it, unless you're getting it all as a gift. But there's other things like paying for the appraisal, like closing costs. You know, if the seller's not paying for the closing costs. So you got to show at least, see, what I would do in that instance, I would probably show another month to show that I was on track. If I had a bank statement, if they were asking me for my October statement and my October statement showed a deficit, then I would give them my November and wait till I got that December statement to show that I was on track. I mean, things happen and we understand that, but it's a matter of explaining and documenting whatever the explanation is. If you have documentation, that's even better.
Hi, I have a question in reference to the bank statements, Ms. Denise.
Go ahead. Mm-hmm.
So I am employed. I've been on my job for 17 years. So I know I can provide the statements from that employment. I also have a business. Would I also provide that information as well?
So
I don't need it, but if it's needed for that process, do you want it?
So if you are, okay. So if you are depositing money as a result of that business, then you got to show something. Do you understand what I'm saying?
My business is not mixed with my employment money.
Say that again.
My payments, my checks from work are not mixed with my business account at all.
Okay, then no.
I don't mix the two.
If you don't need it to qualify, but if it's on your tax return,
it's not.
You might. It's not on your tax. Okay, no. Then nobody's gonna see it if it's not on your bank statement.
But you'll when you run my credit, you'll see items from my business on my credit. So I didn't know if you would need my business information to show that the business pays for those items and not my.
If I need to, yes. If those things, let me just explain. If you have credit on your credit report that's paid by the business, and you don't want me to include that in your personal debt to income ratio, then yes, you have to provide documentation. Now that's going to be tricky because you have to provide 2 years history.
Okay, that's fine.
Okay, so as long as you provide 2 years tax, because you're saying it's on your, but it's not on your tax return, right?
No. So let's just say a car purchased under my business, you'll see that run my credit, but I don't pay for that car. The business pays for it.
But do you file taxes on that business?
The business is a new business. So the business.
So that's going to be a problem because you don't have a 2-year history.
No, but I have a 17-year history from work.
Yes, but I'm saying you don't have a 2-year history for the business. So that debt, whatever that debt is, they're going to charge it against your debt to income ratio.
That's fine. That's fine. Okay.
Yeah. Anything else?
One person had a question in the chat. They asked about, let me go back, about medical bills and student loans being part of the debt to income ratio. How does that factor in, Denise?
So if the medical bills don't add up to any more than $1,000, they're not even going to ask you about it. The student loans, if you need to be on a income-based payment plan, and we're going to use whatever that income-based payment plan is. If the income-based payment plan is 0 and it's going to last for 12 months, then that's what we're going to use. If the income-based payment plan is $15 and it's going to last, that plan is going to last for at least 12 months, that's what we're going to use. But you got to work with your providers, your service providers for your student loans, for them to provide the documentation to show what the payment is and how long it's going to last. And they really are, they working with you because they know what you're doing and they will work with you. Does that answer your question?
It didn't say who made it. This is iPhone.
Okay.
So
Okay.
hopefully they answered their question. They put it inside the chat, so I was reading out the question.
I
Okay.
have a question. Is there an income limit? Like, is there a certain amount that we have to be making in order to qualify?
No, this program, that's one of the good things about this program. A lot of the programs are income-based limits. This program does not have an income limit, nor does it have a location limit. So you don't have to be low to moderate. You don't have to be in a low to moderate area. This program that's not one of the qualifying factors at all. Again, you just have to have 3% down. It has to be for a single or a two family. Can't be any more than a two family, but a single family or a two family. Also, we allow on this program the seller to contribute up to 7% toward your closing costs and or down payment. So if you have some down payment, but you don't have it all, and you can't get a gift, and you got a great realtor like Brandon, who is able to work with the sellers to get them to give you, and this doesn't happen all the time because sometimes the seller can't. The seller may not be able to give you all of 7%, but the realtor is going to do their best to work with you and the seller to try to get as much as they can to help you toward your down payment and or closing costs.
Mr. Denise, I do have a question for you.
Go ahead.
So I do remember you mentioning a little earlier that you don't have to be a first-time home buyer for this.
No, you don't.
And you just mentioned that you could use it on a two family. So let's say hypothetically, my name is already on a loan for something, but I want to buy a duplex to start investing. I can still use this program, right?
No, this is for owner occupied.
Oh, owner occupants. But what if, let's say I live in a property for a year?
Okay.
Is that a way to get around that? Like, let's say a house hack, I buy a duplex, I use this program, live in it for a year, get a tenant in one side.
I don't encourage folks to do that. The program is the program, and the program is to help, owner occupants to be in a property. And if you sell it later on, or you move out and you rent and you get in a better position, then fine. But that's not something that I'm going to encourage.
That leads me to another question then.
Okay.
Is there a limit on, or not a limit, but like a threshold based on how long you have to live in a property? You have to live there for a certain amount of time?
On a conventional, no. If you were talking FHA, I would not encourage you to be thinking like that at all, to be seriously, because you got to sign. There's one document in there that used to scare me to death. There's a document, a FHA document, that says that you told the truth, that you don't have any other ulterior motives, that if they find out that you do, that they can fine you and even jail you. So that's why I say I don't really, and that's on an FHA loan. Conventional is not that strict, but you just want to do the right thing. That's all.
All right. I got you.
Got me? Okay.
Yes, ma'am.
Any other questions?
Yeah, how did you get registered for one of the classes? You said they start back up in January.
So you said you want to register for they're not going to start registering for our free Zoom classes until January. Because they're not doing any classes in December, but they'll start up again in January. If you need to do something before then, you can contact me and I can give you the name of, let me see if I can tell you what it is now. Hold on. Because there are other
And Denise, before we leave out on the call tonight, would you be comfortable if we gave your office number to everyone on the
oh,
Zoom?
no, that's fine. That's fine.
Okay.
That's fine. Because I know some people don't want to ask, they may
Right,
not want to ask questions. And, the best, I really applaud you guys for doing this, because there's nothing better than having an education about what you're getting ready to do for a lifetime. One of the biggest things that you're going to do in your lifetime is to purchase property. So being a well-informed buyer, that takes half the stress out of the process. It just does. So I always encourage people to ask questions.
I think your phone cut out, Denise.
Beg your pardon?
I think your phone cut out.
You said?
I think your phone's cutting out. Yeah, your phone's cutting out,
Is an
Denise.
issue on his side.
Okay, so can you hear me?
I can hear you now. Oh yeah, it might just be right there. My bad.
See if I can I think this class is called Home View Homeownership Education. So it's called Home View, one word, Homeownership Education course, and it's a Fannie Mae program. It's free. So you do it online. So it's like you read some information, you take a test, and you got to get a certain amount at the end to get a certificate. That's how that works. The way our classes work, there's 4 classes. They're 2 hours each. We usually do it Tuesday, Thursday for 2 weeks straight, 2 hours each. You attend a Zoom class, just like this. Information is presented. You get to ask questions. And once you've attended the 4 classes, there's no test. Once you've attended the 4 classes, then you get a certificate. So those are the 2 ways that you can, well, and then there's other classes out there too. We're not the only one. There's other classes.
Let's say if I wanted to take the class, but I'm not exactly sure when I'm gonna have my credit together, or
I would
when
not
I'm gonna have my
suggest it.
down.
So, you could take the class just to take it. Just education is education. So, but your certificate is only good for a year.
Okay, that's what I was getting at. Thank you.
Yep. Now, if you get if you take our class and you getting, 6 months out and wow, you don't have everything together, you can contact us and we'll give you an extension. But you can't contact us 2 days before and say, I need an extension. It doesn't work like that. So as you're going through the process and you say, I need a little bit more time, I need to save a little bit more money, then you can call us and ask us and we can extend your certificate.
Somebody put in the chats, when getting pre-approved for a certain amount, can you only get / qualify for a home for that specific amount?
So let me tell you how I pre-qualify. One of the first questions I ask, and I've been doing this for 30 some years. First question I ask is, how much do you want your payment to be? What's the maximum amount? Because it doesn't do any good for me to approve you for, because it's not going to do but make everybody mad, especially the realtor. If I approve you for $2,500 and they go out and they find you a $200,000-300,000 house, and you say, I'm not going to pay I don't want to pay that amount. You understand what I'm saying? So one of the first questions that I ask is, tell me how much you want your payment to be and where do you want to look? Because there's certain factors in the mortgage payment that have to be taken into consideration. You're talking about principal and interest. You're talking about taxes, which can be a big part of your payment, and homeowners insurance. Location is going to determine taxes. So that's the reason I asked those questions. In case anybody wonders why I asked those questions, that's why. So I can get a good handle on what you're going to feel comfortable with, because like I said, it doesn't any good willing to pay. Does everybody agree with that? Now you can,
Absolutely.
if you could tell me, well, I don't care, just prove me for the maximum amount, then I'm gonna prove you for the maximum amount. But if you're serious about finding a house and about, doing what you can afford, what you can afford, then that's what I'm going to do. I'm going to try to qualify you for that. And the thing is, there's ratios. When we qualify, we're qualifying you based on ratios. So there's a housing ratio and there's a total debt to income ratio. The total debt to income ratio includes your new house payment, which would include your principal, interest, taxes, and insurance. And it's going to include any of the debts that are on your credit report. So it's going to include your car payment, your credit card bills, student loans, anything that we have to include is included in your total debt to income ratio. If you guys have a pencil, I can tell you this right now. If you take your income, your annual income, and you divide it by 12, and you multiply that figure times 0.45, your payments, your mortgage payment, your new mortgage payment, your car payment, and your credit card payments should not exceed 45% of your total of your income, your monthly income. It's not rocket science. It's a formula. Seriously, that's what we're going to be looking at. It's a formula.
So that's my bad.
Go ahead.
No, I was just going to say that's the total debt to income ratio that your underwriters look at is 45%.
Yes.
That's the desired.
And on this program, we use one ratio. We don't have a housing ratio, Anna.
Okay.
Everything should not exceed 45%. And the reason why we do that one ratio thing is because if you're on Social Security and you need to get the maximum out of this. So I don't want to have to do like a 30% on the housing ratio. And when you don't have any bills, the only thing you're going to have is the one payment. So 45% of your monthly income is what we're going to be looking at. So then once we get that figure, then we know what, we can figure out your house payment and all of that kind of good stuff.
What was the formula again? It was your monthly gross income or monthly net income?
Monthly gross.
Okay.
So take your annual divided by 12 times, and whatever that figure is, that's your monthly. Multiply that times 0.45. Whatever you have there, you're going to subtract your car. This is how I do it. Subtract your car payment, your credit cards, whatever is left, that's how much your house payment can be. And guess what? When I ask the question, that's why I do it. It's always so funny. When I ask the question, well, how much do you think you can afford? It's usually, you guys know, just subconsciously, you really already know. You know what I'm saying? You guys know, because you got to deal with your budgets and how much money. So you pretty much know what you can afford and what you can't afford.
So
Divide the annual gross pay by 12, and then you said do what again?
Times, and then you got your, then once you got your monthly income, multiply that times 0.45.
Okay, and then deduct the car payment and your credit
And you,
card.
yep,
or your-
and that's
I have a question for those who are trying to, like Jordan saying, the house hacking method. Do you take in consideration those who are looking to get a 2-family and then use the rental income as part of their income overall? Yeah.
we can. There's got to be no other factors that are kind of iffy, you know, because they don't have to do that. It needs to be be close every, you understand what I'm saying? Yeah. There are those does not have it.
You heard it like I just heard it, Brandon.
Staticky?
It's bad signal.
Yeah.
I can't hear anything.
I thought it was me.
Nah, you're going in and out.
Can you hear me?
No, Denise, you're in a bad area again.
Can you hear me?
No.
A little bit. A little bit.
She dropped the call.
I don't even think it's my Wi-Fi. I'm like, damn, I gotta up my service now.
Well, you sounded like a robot too, Brandon. I'm gonna go ahead and put you in her category.
Oh damn. You still with us, Denise?
No, she dropped the call.
Oh damn.
She came back. She right here.
You back with us, Denise? Oh. Yeah, because I mean, for like to answer to piggyback on what Jordan was saying, a lot of people, especially people who are looking to be real estate investors, I know a lot of times they'll take the income from a person who's trying to quote unquote house hack, like Jordan was saying. When you buy a 2-family, use the income from the tenant as your overall income. That will help with your debt to income ratio in certain situations. But I really would love to hear Denise's take on that.
I would like to use this program to do a house hack, man.
I know. I heard you, bro. By the way, guys, until these get back on, I want to introduce Jordan. Jordan is one of our agents, part of the Dream Team. If you guys are looking to get started, him and then Jen also are the agents you guys want to talk to after the Zoom call tonight. Because not only myself, because I'm only one man.
Everybody.
You know, so these two, and by the way, guys, leave your drop your numbers in the chat. That way, once again, they can reach out to you guys tonight, or if they want to get started as soon as possible.
I'm not ready
Can
yet.
you
I
hear
gotta
me now?
keep working on my credit score. Yep, we hear you.
Yeah, we can hear you.
So listen, I thought that was Jordan asking me those questions. Hey, Jordan.
How you doing, Miss Denise?
I'm good. How are you?
Going good.
That's good. Okay, you got any other questions for me?
We kind of didn't hear the answer the last one.
Say that. Okay, what was the last one?
To use Jordan's example of the house hacking of if I buy a 2-family house and then I take the rental income from that tenant, can I use that as my overall income to help my debt temp?
So in most cases, yes. What I was trying to explain is in most cases, yes. That is an underwriter can say no. You know what I'm saying? If they see something weak in the file, the underwriter can say, I don't know, because they don't have a history of collecting. You know, if the credit is weak, is real weak, they could say, don't really have a history of collecting rent, don't have a real good history of paying, you know, their debts. I don't know. So that is an underwriter, you know, can say, I'm not comfortable doing that. But in most instances, I have been able to do it. But I remember one time she was like, I'm not gonna let you do that. Can you guys hear me?
Mhm.
Yeah.
Can you hear me?
Yeah.
Okay. Yeah. So, see, that's my job. My job is to work with that underwriter to make sure that, to just kind of fight on your behalf. So,
No, I appreciate that, Denise. And by the way, I apologize, Lavita. Yes, Lavita is also an agent who also help you guys too. I apologize about the Lavita. She's also dropped their information in the chat also, guys. So we're all part of Dream Team Realty. And at the end, we'll have Mr. Cartwright give us some words of wisdom at the end also.
you mean Cartwright been on here all the time?
I think so.
See his name.
Mr. Cartwright?
He might be just listening.
Mr. Cartwright hasn't corrected me on anything?
Yeah, I guess he'll chime in later on, I guess. But does anybody else have any more questions for Denise?
Okay.
We close out. Anybody got any more questions? So once again, I'm glad for everyone came on to the Zoom tonight. I know once again it's 6 o'clock. It's prime time for people to start eating, get the kids together. So I appreciate y'all being on tonight. And like Denise said, you should be proud of yourselves for taking the first step and making the commitment. As like you said, one of the most important investments you'll make is your home. I just want to say, if you guys looking for help with credit, I can help you guys in an aspect. I believe everyone who's on this Zoom, I have texted you personally. So that number that texts you about the Zoom tonight, that is my number. I can help you with your credit. But once again, if you guys need help, if you guys are looking to get started right away, as far as getting with the classes or whatnot, and if you're looking to get pre-qualified as soon as possible, Denise, do you want to give the people your number?
Yes. Okay. So my number is 216-672-3527. That's my office number. My cell number is 216-970-2744. And my email address is drobinson, DROBINSON at CHN housing capital dot, housing partners, PARTNERS.org. So it's DROBINSON at CHNHOUSINGPARTNERS.org.
Perfect. Appreciate Denise. Mr. Cartwright, if you have any last statements to make, if you're listening. No. Okay.
Hello.
He's just a ghost.
What? Shemaya, come get this charger.
If anybody has anything else to say, I want to thank Denise for coming on tonight once again.
Take this charger upstairs.
For being on the call tonight and sharing that great information. And once again, guys, you have all of our numbers now. If you want to get started right away, or if you're not ready to get started right away, you need help with your credit, or if you need help overall to start saving up, please give any of these great people on the chat a call as soon as possible. Once again, thank you guys for being on, and I'll tell you guys good night.
Okay, thank you guys. Don't
Talk to
forget,
you soon.
if you have
All right,
questions,
talk to y'all soon.
Brandon, maybe you might want to do a follow-up because they're going to think about questions after the fact.
Okay, yes, and everybody has anybody, if anyone has any follow-up questions, please text me and I will forward it to Denise, or I'll give her number to you ask it directly also. So, but thank you guys once again.
All right,
Thank
thank
you.
y'all.
Good night.
Thank you. Good night.
Yeah.
Good night.
He's pretty.